Livestock ETF. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So here is livestock, represented through the cow ETF. So we do have a 15.6% here, 0.60% move from the 52-week low, and we are approaching a 6-ish% pullback from the 52-week highs. So let's jump into the charts. So here we have the big picture, weekly data points. So we did have this very sharp sell-off here from 2019 into 2020. So let's actually measure how substantial that was. So from that high to this low around here, minus 51%. Then we have seen a very strong rally, but we are still pretty far away from these highs. The purple 20-week moving average used to be very good support. It was a clear, buy the pullback level. But it's now become resistance. So if we zoom in here, you can see that we are approaching that level, and the two prior times we were up there, we did actually see that the sellers came in significantly. So that's basically the technical setup here. If we go here to the daily data points, zoom out a bit, so we have the 200-day moving average, which we have been able to close above. I think a more important moving average here would be this blue 100-day moving average. It's been pretty key as resistance as of late, but it has had the potential to be very good support here in the past. So there's definitively been a change here from bullish control to bears having more leverage. But let's explore a bit further. So when we look here at the weekly data points and the MACD, we do see that deterioration, but that is basically to be expected. When we jump here to the daily data points, we see here that notwithstanding this deterioration here in the MACD and price, the accumulation distribution is pretty close here to breaking out. So we do have a bullish divergence between price and accumulation distribution. So there's obviously institutions buying into this pullback. Looking at RSI, we are currently at a level that ever since August here, of this year, we see that it's been a level where the bulls struggle. It has a tendency to trigger pullbacks. Given that we also have this moving average resistance here, it's a risk. When you look here at the distance between price and the purple 20-day moving average here reflected with the PPO, it is at a level that, back here, it triggered a pullback. And also, here we did see some eventually deterioration. So the situation here is, it's a bit noisy. Looking here at the correlations. So with the S&P 500, we have a minus 43%, positive 42% here with the agricultural ETF. Only 7% positive here with lean hogs futures, and live cattle we have we could say 58% positive correlation. Looking short term, daily data points, minus 6% negative correlation with the S&P 500, only 12% positive with agriculture ETF, 66% positive with the lean hogs futures. But then we have a minus 22% negative with the live cattle futures. So correlation-wise, it's a bit surprising. I expected the correlation to be consistently high with especially lean hogs and live cattle. So that's interesting. I'm not entirely sure what explains it. When it comes to ETFs, these kinds of divergences, it could be tracking errors. That's one explanation. It could also be the balance between the hogs and the cattle in the ETF. because if it's not perfectly 50-50, then that could create noise. And of course, there's different dynamics for hogs and for cattle as well, which is another key factor. Okay, so here we have the seasonality of livestock. Over the last 5 years, you see here that we are in a strong season for these kinds of meat. And also see here that January tends to be pretty strong. If you look here at the last 10 years, November is one of the strongest months, and October is also pretty decent. December a bit weaker, but then strength in January. And over the last 20 years, then you see here that November is the strongest month, both in terms of how often we close higher, 89% of the time, which is very strong, and an average 4.2% gain. So the seasonality here is definitively more in the bullish direction. We tend to see a bit of a pullback in December, but then January is the second strongest month. So yeah, the current month and the coming months are just very, very interesting for this ETF. So here is Finviz. They draw the trend lines. So we are in this trend channel. When we look here at ETF.com, we see that cow tracks an index of lean hogs and live cattle commodity future contracts, rolled according to a fixed schedule. So it's an ETN that tracks an index, so that differs from our benchmark, which incorporates all three types of livestock contracts: lean hogs, live cattle, and feeder cattle. The index typically rolls its contracts every other month, except in May and June, when the lean hogs exposure rolls into the front month contract, to allow for greater contract liquidity during the summer trading season. As an ETN, cow does not issue a K1 form at tax time. So the expense ratio is 0.45%, which is not, it's not that bad given that there's very little competition in this space. Assets under management approaching $21 million US, so not big by certainly very modest. It should be bigger, because one of the ways to diversify is to have exposure to commodities. But yeah, taking all the evidence together, we do have a very clear resistance level above us. But the seasonality strongly suggests that it could be, breached, that we are going to get through it. So I do lean a bit bullish, but it could be that we might have a bit of a pullback before we break out.